educated at home.
Standard & Poor's Rating Services boosts its outlook for U.S. government debt. S&P says one reason is stable government spending levels. The credit rating service also says the economy has started to improve and is expected to continue on that trend. S&P changed its outlook from negative to stable. That means it's not as likely to downgrade the country's debt in the near future. S&P downgraded the U.S. government's long-term credit rating back in 2011.
Joining us now by Skype is Bill Frezza. He's a fellow at the Competitive Enterprise Institute and a Boston-based venture capitalist. Bill, break it down for us. For the average American, what does it mean for the credit rating to be upgraded?
Well, right now it means theater. Let's not forget the S&P ratings agency is being sued by the Justice Department. In addition, in a commercial litigation, McGraw Hill shareholders sought refunds for buying the stock back when the market collapsed. And a federal judge ruled that claims of objectivity and independence on the part of S&P were nothing but commercial puffery. Those claims were then used back in the Justice Department suit to claim that there was no basis for fraud, and in fact, there's no reason that we should believe these ratings.
The S&P cites an improving economy as a reason for the stable rating. Do you think the economy is improving?
If you look carefully at those numbers, you'll see that the labor participation rate is the lowest that it's been in 30 years. If you take the U3 unemployment rate and adjust it for labor participation, the actual unemployment rate is more like 11.3%. The stock market is certainly up because cash has no place else to go seeking return. So we're all enjoying at this point a shared illusion, hoping that reality follows behind it and people feel better and start spending. And right now, that's just a dream.
Bill, do you think Americans can breathe a sigh of relief and say the economic crisis is over, or can we expect more trouble ahead?
They can try the same sigh of relief that the Greeks have tried 6 or 7 times. We've got nothing but trouble ahead, not only because of the monetary situation, but let's not forget the fiscal situation is still not being addressed. Social Security still is in trouble. Medicare still is in trouble. And now we have Obamacare coming down the road, which is not only going to have a huge impact on the economy, but you're going to see companies cutting payroll and cutting hours to avoid tripping the thresholds under which Obamacare is enforced.